If I would have invested early into Amazon, Apple, or Facebook, I'd be a millionaire today. That's what many of you are saying. Well, the truth is, those people that invested early into the internet boom and placed their bets on the right companies, they didn't just make money, they made generational wealth. In fact, many of those people are now in the Forbes billionaires list. And the exciting thing is that we have a very similar opportunity right in front of our eyes today. And that opportunity is Bitcoin. And yeah, I know, you've probably heard many stories of people that made fortunes with Bitcoin. But does that mean that you missed the boat? No, it doesn't. You have exactly 6 years left to position yourself for generational wealth with Bitcoin. And in this video, I am going to explain why this specific timeline is so important. And before we dive in, do me one quick favor. If you enjoy watching videos like this one, where I break down complex topics in the world of investing, crypto, and finance, then smash the like button and subscribe to my channel, because I'm going to be posting regular videos just like this one to help you to make sense of everything that's going on in the market and to make sure that you maximize your gains as a crypto investor. All right, let's dive in. You have only 6 more years left to build generational wealth with Bitcoin. Here on my screen, you see a picture of me traveling through Thailand. This is in Koh Phangan, Thailand, which is a very beautiful island. I flew there in 2017 with 2 of my friends. And this was at the very start of my entrepreneurial journey. I've made my first few $1,000s online from my laptop, was overlooking the ocean. I was super happy. But one of my friends was a crypto trader. And he was telling about all of the gains, all of the profits that he was making on a daily basis. And this was right at the start of the 2017 bull market. Suddenly, all of the conversations around me were about crypto and how much money everyone was making. And I disregarded the idea because I believe in focus. I believe that every time I have shiny object syndrome and I hop on something new, I tend to lose focus and ultimately lose money. But still, I heard everyone around me was making money with crypto. So at one point, I just grabbed my friend. I told him like, all right, now you're going to teach me how I can invest in crypto. So he told me, open up an account on an exchange, buy some Bitcoin and Ethereum, and you'll be fine. Just get started with that. So that's exactly what I did. So I opened up an account. I bought my first Bitcoin and Ethereum. I was so happy. I invested around $8,000 of my hard-earned online money. And I was expecting that this money would become a lot more. I hoped it would be millions overnight, that the next day I would make up, and so that the next day I would wake up, check my portfolio, and my balance would be $1 million plus. So unfortunately, that's not how it went. In crypto, you have this meme of the Bogdanov brothers saying like, he bought, okay, dump it. So then I bought at this little tip over here. I believe Bitcoin was at around 5,000 and then it crashed to 3,000 within the time span of just a few days. And I saw my portfolio going down and down and down. My $8,000, which I invested, suddenly became 7,000, 6,000, 5,000, 4,000, 3,500. And at that point, I panic sold and I pulled all of my money out of the market because I was afraid it was all gonna go to zero. The fruits of my labor, all of my hard work that I put into earning this money, I was afraid that it was all just going to suddenly evaporate. And then you have this other meme in the crypto market, again, of these Bogdanov brothers. He sold, okay, now let's pump the market. And I felt like that happened to me. So just a few weeks later, a few months later, so I sold around, middle of September or end of September. And then a few months later, around January 2018, the market was at an all-time high. Bitcoin was worth 17K per Bitcoin. And I missed out on all those gains. So I made a big fat loss. I lost $5,500 in just a few days. And afterwards, I saw that the price of Bitcoin exploded to the upside, and people around me were making so much money, and I was sitting on the sidelines with a big loss. So this brings me to the point that investing is not gambling. What I was doing at this particular instance, where I invested my first $8,000 into crypto, was gambling. Why? I was only looking to get rich quick in the shortest period of time with the least amount of effort. And that's very comparable to the mindset that people have in a casino. Why would you go to the casino? Well, you maybe want to 30x your salary of the day. Maybe you earned $150, and by going to the casino, you can maybe earn a nice 36 multiplier on the roulette table, instead of having to work another 36 days for your money. So people in the gambling space are just trying to get rich quick. And I was also trying to achieve that same result with my first investment. The problem was I didn't do my research. I didn't understand what I was investing in. I didn't look at previous market cycles. I had no clue. And when you have no clue what's going on and the market is suddenly changing, then you make the wrong moves. So Michael Saylor, the CEO of MicroStrategy, he recently said something really interesting on a podcast. He said, after studying Bitcoin for 0 hours, you'll probably say Bitcoin is a scam. And that's exactly how I felt after I pulled my money out of the market with a big fat loss, and then suddenly the market pumped again. So I called Bitcoin a Ponzi scheme. It has no real value. People are only speculating on it because, it goes up, and that's the only thing why people put their money into Bitcoin. But at one point, the Ponzi scheme will collapse and everyone will be in loss. So I was super sour, salty, whatever you may call it. I was super toxic about Bitcoin because I just lost a lot of money because I didn't study what Bitcoin was. So after studying Bitcoin for 10 hours, you realize that, all right, well, Bitcoin is this decentralized system where people can transact between each other, and they can do so without any intervention from banks or governments. I'm sure that this is not legal, right? The government will probably shut it down. Okay, after 100 hours of studying Bitcoin, you understand, okay, Bitcoin is a crypto project. It's a new kind of technology. We evolved from Web 2 to Web 3. We're now living in a decentralized era. And yeah, this is an emerging technology, and we can make money by betting on these emerging technologies. That's like the level of understanding you have after studying it for 100 hours. Now, what if you study Bitcoin for 1,000 hours? Well, after studying Bitcoin for 1,000 hours, you start to understand the market cycles. You understand the supply and demand mechanics. You understand mining and how miners release new supply on the market, and how that new supply gets more scarce over time, and how other big institutions are buying up Bitcoin. So there's a lot of buying pressure while there's very little, there's very limited supply. So with increasing demand and very limited supply, then over time the prices of something tend to go up. So yeah, Bitcoin can make me rich over the long term. After studying Bitcoin for 10,000 hours, you start to understand almost the spiritual side of Bitcoin. The whole philosophy why Bitcoin was created in 2008, 2009, with the whole backdrop of the 2008 financial crisis, where there was a lack of trust in the institutions, in the banks, in the governments, because a lot of people higher up were making a lot of money risking account holders' money. So they created a very corrupt financial system. And all of that because people in these intermediaries and at government positions were making big fat bonus checks while the average person was losing money due to the market collapse. So Bitcoin is a way to set everyone free from government control, to take back the ownership over your own financial situation. So that's a very interesting progression. And I wish I had studied Bitcoin more before making my first investment, because then I would have not pulled my money out of the market with a big fat loss. So the difference between gambling and investing is that when you're investing, you actually research and you actually understand and you have a game plan behind your investments, and you're not just hoping to get rich quick. Of course, making money is a very important component, but you also need to make a calculated estimate of, how long you're willing to hold on to a certain asset and why that time period is so interesting. So why do we have specifically 6 years left to make generational wealth with Bitcoin? Okay, let's talk about the Bitcoin power law model. I made a whole video about it on my YouTube channel. The title is something like this most accurate prediction model predicts a $1 million Bitcoin by 2030. So the power law model is currently the most accurate prediction model that we have available. This model takes many different data points into account, and it places certain weights and values on different variables to estimate where the price of Bitcoin can go in the future. And if we extrapolate the price of Bitcoin, so the black line, it moves between this red band, that's like the top of the bull market, and the blue band, which is the bottom of the bear market. So in 2030, they expect, according to this model, that Bitcoin could be somewhere around $1 million per Bitcoin, or at least between 2030 and 2034. So that would give you somewhere between 6 and 10 years until Bitcoin is somewhere at around $1 million per Bitcoin. That is if you believe the Bitcoin power law model. Of course, there's other models out there, like the stock to flow model, which was created by Plan B, a Dutch institutional investor, which has been a very accurate prediction model up till the previous bull market cycle. You could argue that, the previous bull market cycle ended too early because of the Russia-Ukraine conflict, but the people within the crypto space started to work on a new and more accurate model and came up with the Bitcoin power law model. So that's this model. And up till now, this is the most accurate model that we have available. All right, so Robert Kiyosaki recently posted this tweet, and it's very interesting. He says, "The rich will get richer. The question is, who will be richer? The people who save gold, silver, and Bitcoin. I own all of these 3 financial assets. The next question is, who will be poorer? The people who save dollars, pesos, yen, euros, and loonies." Basically, it comes down to the fact that if you're saving money, fiat money, then that money tends to become worth less over time due to inflation, because governments around the world are printing more and more money, and this makes every unit of money less valuable, and you experience this because you have less buying power in daily life. So you can buy less products and services with your money over time. So life will only become harder if you save in fiat. Then he says, "As I warned in Rich Dad Poor Dad, savers are losers because cash is trash, because it only becomes worth less over time. Bitcoin will soon break 100K. It already broke 100K. So this is an older tweet. Once Bitcoin passes 100K, it will almost be impossible for the poor and the middle class to catch up. That's totally true. But the thing with Bitcoin is, you can divide one Bitcoin into 100 million different pieces. We call those sats or satoshis. And you don't have to buy a full Bitcoin. For many people out there, a full Bitcoin, paying 100K for a full Bitcoin is a lot of money. We don't all have a spare 100K on our bank account. If you do, that's great, but many of you don't. But he is continuing with this argument that, once Bitcoin starts to go beyond 100K, it will be almost impossible for the poor and the middle class to catch up. The horse will be out of the barn and running. So why? Once Bitcoin breaks 100K, only the ultra rich, such as corporations, banks, and sovereign wealth funds, will be able to afford Bitcoin of any consequence. FOMO is good. Don't get left behind. Don't let the rich get richer without you. Okay, let's again dissect this tweet. So Robert Kiyosaki believes that once Bitcoin breaks 100K, it will most likely keep going up from there onwards. And the average person will not have enough money to keep buying Bitcoin. Bitcoin will become unaffordable for them. So this brings us to the point that we have a limited amount of time left to accumulate as much Bitcoin as possible to load up our bags, because when Bitcoin is going to go up, then it's going to become unaffordable. But at the same time, if you have already accumulated a lot of Bitcoin, and then those ultra rich, like Robert Kiyosaki explained, the banks, the institutions, the sovereign wealth funds that have billions and trillions to invest, then they're going to drive up the price. And you as a holder of Bitcoin benefit from that. And that's why he's saying FOMO, fear of missing out, is good. But you want to be in early, because those institutions and the ultra rich, they're going to end up in a bidding war to drive the price of Bitcoin up and up and up over time. So Michael Saylor, the CEO of MicroStrategy, he predicts that the price of Bitcoin is going to go to $13 million in the next 21 years. And that's his base case. So he also made a more optimistic scenario and a more pessimistic scenario. So in the most optimistic scenario, he believes that Bitcoin can go to $49 million per Bitcoin. And in the most pessimistic scenario, he believes it can go to $3 million per Bitcoin in the next 21 years. So if you realize that Bitcoin is now hovering around 100K and you understand that it can grow to 3 million or even 49 million, then it means that Bitcoin today is dirt cheap. And that you have 6 to 10 years left to accumulate as much as possible, either through dollar cost averaging, through trading, or through mining, whatever you are comfortable with. But if you understand these numbers, then it makes sense to accumulate as much as possible before it becomes unaffordable for the average person to do so. I believe that investing isn't for the rich. It's the vehicle to become rich. It's how you go from poor and middle class to becoming wealthy. But only if you really understand what you're doing. Only if you've really, truly studied the asset class. Otherwise, you will make stupid mistakes like I did, like pulling out my money out of the market when I was down, when there was just a small market correction. But that's why you're watching my videos, of course, because you want to be educated. You don't want to make those stupid rookie mistakes and miss out on a lot of money down the line. So let's zoom out for a second. The global asset market is a $900 trillion market. So that's all of the wealth spread out over all of the different asset classes. So we have around 330 trillion in real estate, 300 trillion in bonds, 120 trillion in cash, 115 trillion in equities, then cars and collectibles, 6 trillion, art, 18 trillion, gold, I believe right now is around 18 trillion, 17, 18 trillion. Bitcoin, I believe right now is at around 2 trillion. So the whole case that Michael Saylor and also Robert Kiyosaki are making is that in the next few years, in the next decades, we are going to see a reallocation of wealth from these asset classes getting distributed into, for example, Bitcoin. Because Bitcoin right now is such a small fraction of the entire asset market. I think it's 1 or 2% of the global wealth is right now in Bitcoin. But if you compare it to all of the other assets out there, it is offering a lot better returns. Bitcoin has generated 230% annualized returns in the past decade, so 2010 to 2020. And if you compare it to gold, it has a lot of the same characteristics as gold, but it also has many better characteristics than gold. So that's why some people see it as better gold or digital gold. So we're going to see a redistribution from all of this wealth across these assets into Bitcoin, according to Michael Saylor, and I strongly believe that too. Why? We're actually seeing signs of this happening already. For example, earlier this year, Japan's $1 trillion pension fund was announced that they were considering Bitcoin for diversification purposes. Why would Japan's $1 trillion pension fund consider this? Well, if they're holding a lot of yen is one of the worst performing currencies out there right now. So the yen is losing a lot of its purchasing power and also has a very low exchange rate compared to other currencies out there. So recently, earlier this year, I went skiing in Japan, in Niseko. And I went to Japan 3-4 years ago, and I remember that Japan was super expensive. Every time I got a bill the check at a restaurant or whatever entertainment place, I was shocked by how expensive it was. But this time, every time I got a bill or I had to pay my hotel, I was surprised by how cheap Japan was because their currency devalued a lot. So yeah, when you're a pension fund and you need to take care of, millions of people, their retirement, well, you need to find an asset that can generate great returns and protect against losing purchasing power. So that's why Bitcoin is a very interesting asset for these pension funds. Also, this article, the first UK pension fund to invest in Bitcoin. So it's not only Japan, it's not only the UK. We also hear rumors about, for example, the Florida State Pension Fund that's managing $185 billion worth of assets or wealth. So yeah, we're seeing a wave of these pension funds that are now starting to embrace Bitcoin. And yes, they might not buy Bitcoin outright. They might not go on Coinbase or Binance and buy Bitcoin there. They will probably buy it through Bitcoin spot ETFs. So, but as more money flows into these spot ETFs, BlackRock will also buy up more Bitcoin, and indirectly this drives up the buying pressure for Bitcoin. Also, up till this point, or up till maybe even last year, very few financial advisors were advising their clients to allocate a certain percentage of their portfolio to Bitcoin. They were very reluctant. Why? Because governments around the world haven't really given a lot of regulatory clarity about how Bitcoin is going to be taxed, how ownership of Bitcoin is going to be regulated, and what transactions are allowed, what transactions aren't allowed. So it's still a very unclear, unregulated area. But it's all seeming to change this year. Now that the institutions like BlackRock are aggressively entering the Bitcoin space, and when BlackRock enters a space, then they usually tend to get what they want. Obviously, BlackRock wants to get mass adoption for Bitcoin. They want to normalize Bitcoin, and having this stamp of approval of BlackRock, this massive $11 trillion institution, gives a lot of credibility. So now you're seeing that BlackRock is coming out with their marketing machine, and they're publishing article after article. And now they're even saying that, BlackRock recommends that people allocate as much as 2% to Bitcoin. So 2% of their clients' investment portfolios to Bitcoin. And it compares it to the Magnificent Seven. So the Magnificent Seven are the top 7 tech stocks on the stock exchange, like Nvidia, Apple, Microsoft, Tesla, etc. So it's a similar type of investment. For 2/5 of the financial advisors, a bit of Bitcoin makes sense. So now you're seeing a shift. For the past 15 years, no single financial advisor recommended it to their clients. And now suddenly BlackRock and other groups of financial advisors are recommending Bitcoin. So that's great. Then we have publicly traded companies that are buying up Bitcoin. So the OG is, of course, MicroStrategy, that started buying up Bitcoin 4 years ago in the previous bull market cycle. Right now, they own around 440,000 Bitcoin almost. Marathon Digital Holdings, which is a Bitcoin mining company, but they're also buying up Bitcoin. They do both strategies. They own around 40,000 Bitcoin. Riot Platforms, another miner, owns 16,000 Bitcoin. Tesla owns almost 10,000 Bitcoin. CleanSpark, another mining company, owns almost 10,000 Bitcoin. Hut 8, another mining company, almost 9,000 Bitcoin. Coinbase, 9,000 Bitcoin. Block, which is from the founder of Stripe and X. What's his name again? Jack Dorsey's company, Block, owns almost 8,000 Bitcoin. Galaxy Digital Holdings, which is a digital asset management firm, 8,000 Bitcoin. Bitcoin Group, German company, almost 3,000 Bitcoin. So I can go on and on and on and on, but there's an increasing amount of publicly traded companies which are leveraging the financial markets to borrow money, to borrow billions, millions in order to buy up Bitcoin. And you see that, yeah, if you add up all of these Bitcoin holdings, it's a very significant chunk. And this is just the start, in my opinion. This is just the initial phase of companies, publicly traded companies and private companies that are waking up to the potential of Bitcoin. Then we have banks. Banks were always the biggest critics of Bitcoin. Why? Because banks see Bitcoin as competition. They cannot control it, or in a very difficult way. They don't have any saying about what transactions are allowed on the network, what transactions are not allowed on the Bitcoin network. So it's very difficult for them to keep control over the financial system when there's another peer-to-peer system, where they don't have any authority. So banks feel as if they're being undermined by Bitcoin. So of course they're going to attack Bitcoin because they want to be the dominant players in the space. They want to be the ones calling the shots in the financial industry. But they have tried to attack Bitcoin for 15 years, calling it a digital currency for drug cartels, for criminals, you name it. But even the banks now realize that it's impossible to fight Bitcoin. Bitcoin has already gained unstoppable momentum. And rather than fighting it, they are now starting to embrace it for their own good. So here you see an article, Goldman Sachs hold around $461 million in BlackRock's IBIT, which is its Bitcoin spot ETF. So yeah, now banks are also getting exposure. Countries. So the US is the biggest holder of Bitcoin. China holds also quite a lot of Bitcoin. They hold around 195,000 Bitcoin. The UK, 61,000 Bitcoin. Ukraine, almost 50,000 Bitcoin. Bhutan is mining Bitcoin, 13,000 Bitcoin. El Salvador, almost 6,000 Bitcoin. Finland, almost 2,000 Bitcoin. Georgia, a little bit. And Germany sold. I think that's going to be one of the worst financial mistakes that Germany ever made. Recently, I also heard rumors that Qatar is considering a $500 billion investment into Bitcoin. And if the rumors are true, they have actually already started to accumulate Bitcoin behind the scenes in stealth mode. So they haven't publicly announced it, but inside sources are basically saying that Qatar and also other Middle East countries like UAE, Saudi are also slowly waking up to the potential Bitcoin and starting to accumulate a little bit of Bitcoin left and right. So yeah, nation states. States specifically. So in this case, we're talking about the US. So the US has a bunch of different states. So Florida is waking up to the potential of Bitcoin. So Florida may introduce a Bitcoin reserve in 2025, leveraging its $185 billion pension fund. Here, Pennsylvania, the Pennsylvania House introduces bill to implement a Bitcoin strategic reserve. Here, Texas has also started talking about implementing a Bitcoin strategic reserve. I also heard the state of Ohio is talking about implementing a Bitcoin strategic reserve. So let's recap this. Soon, only the elites and the ultra-rich will be able to accumulate Bitcoin because Bitcoin is just going to become way too expensive. You can look at it as like owning a very premium piece of real estate at an AAA, and I don't mean Alcoholics Anonymous, but at a top location, for example, in a big city. So for example, on Piccadilly Circus in London, or whatever iconic street in New York, or in Boston, or in Tokyo, or in whatever. Name one big metropolitan city and name the most high in demand area, and imagine that you were able to buy that real estate 100 years ago when it was still cheap and affordable. That's the way I look at Bitcoin right now. Similarly, we use the example of investing into the tech boom early, investing into companies like Facebook, Amazon, and Apple before their stock prices went up astronomically and they became trillion-dollar companies? What if you were able to buy those stocks 20 years ago? That's exactly where I believe that we are at right now with Bitcoin, and we have only 6 to 10 more years in order to accumulate as much Bitcoin as possible before the price starts to skyrocket and only the elites and ultra wealthy can get their hands on more Bitcoin. So I'm really curious to hear your thoughts in the comments below if you agree with this timeline or not. And if you enjoyed watching this video, do me one quick favor, smash the like button so I know that you got good value out of it. And if you haven't done so yet, also make sure to subscribe to my channel because I'm going to be posting regular videos just like this one to help you to maximize your profits as a crypto investor. All right, thank you so much for watching. Take care, have an amazing day. Peace out. I'll see you in the next one.